Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome to Financial Issues. Thanks for tuning in today. We're so glad that you're here. We want to help you be a better steward. So our goal is to help educate people about stewardship issues from a biblical worldview and specifically give you good information so that you can honor the Lord in the way that you invest by adopting a biblically responsible investment strategy that you can find out more about if you become a partner of our ministry. So speaking of the partners, we do have a partner conference call today at noon Central Time. So that's 1 o'clock Eastern Time. If you're a partner, you should have already gotten an email with the information on how to log in. If you didn't get that email, check your spam folder and email Pat to make sure that your partnership is current and you're on the list. If not, go log into your Financial Issues account and then go to the partnership conference call tab, and you'll be able to find out the phone number that you can call in and listen to the partner conference call. If you miss it, don't worry. We will post it on the partner side of the website, so you'll be able to listen to it when it's convenient for you. Just make sure that you get in there in the next week or so. Usually the information that we share with the partners is pretty timely. It's we go more in depth into the financial issues strategy and answer some questions that partners have that are actually managing their own biblically responsible portfolio, and we would suggest to you that perhaps you could do that as well. So learn more about our strategy at financialissues.org, because it's just $132 a year to partner with the ministry, and you get access to all of the partner benefits. And during the month of December, you can wrap up all of that wisdom, all of the things that you learn from Financial Issues, and put a bow on it and give it to someone you love, someone you want to teach about good stewardship. So you can find out more information on how to do that at our website as well, financialissues.org. Well, on today's show, we are going to talk a little bit about the inflation data that has just been released. We're also going to try to get caught up on some of the questions that you guys have been so faithfully sending in. So CPI, the CPI Consumer Price Index data came out yesterday morning, and it was for the month of November. It was as expected. Both the headline number and the core number for Consumer Price Index rose 0.3% month over month. That means that prices are still rising. They're just not rising as fast as they used to be. So compared to last year, headline inflation was up 2.6% last year. This year, this month, the annual number is 2.7%. Let me rephrase that. I got my words all jumbled up there. 2.6% was the annualized rate last month. This month, the annualized rate is 2.7%. So, we are starting to see a little bit of a tick up in inflation. Now, the core number was the same as it was last month. The annualized rate was 3.3%. Month over month, the core inflation was up 0.3%. So the core inflation number strips out food and energy because those are the more volatile components of the calculation. Energy prices rose 0.2% month over month. Energy prices are 3.2% higher than they were a year ago. Food prices went up 0.4% month over month. It doesn't sound like a lot when we're talking about fractions of a point for increases, but when you look at the yearly number, that really helps put it in perspective. So year over year, food prices are up 2.4%. That's better than what we've seen in recent years, but still a little bit higher than we would like. Services inflation, if you take out energy, and this services inflation is never transitory, as the Fed floated that idea at one time. But services inflation rose 0.3% month over month. It's up 4.5% year over year. The cost of renting your place of residence is up 4.9% year over year. The cost of owning a home is up 4.4% year over year. Medical prices rose 0.3% month over month and are up 3.1% year over year. What about auto insurance? Anybody got a renewal notice lately? Luckily, those auto insurance increases, the statistics tell us, have sort of flattened out for a second month in a row. They are up 0.1% after a 0.1% drop last month. Year over year, 12.7%. So not sure how that compares to your actual personal renewal on your auto insurance, but if it's in that neighborhood, just know that you're not alone. CPI and PPI reads this week will give us a clue at what the PCE inflation number will be when it comes out 2 days after the Fed's next interest rate decision. So the Fed won't have their preferred gauge of inflation read available before they make the next interest rate decision. So like us, they will be looking at the CPI and the PPI data to sort of extrapolate what PCE. Though there's a difference, the Fed's preferred gauge is PCE, which tends to run, 50 to 100 basis points lower than the CPI and PPI reads, and that's the reason for that is on how it's calculated. So they weight different components differently. The major two things that they weight differently are healthcare and housing cost. So, it's all a matter of how you dice up the numbers, and you can do a lot of interesting things with math by how much priority you place on certain things. So there is over a 96% chance that we will see a interest rate cut of 25 basis points by the Fed on December the 18th, followed by a 75% chance of a pause in January. So interesting stuff there.
Sure is, Shana. Thank you for that information. I think we've got time to get to at least one or two questions here, if that's good with you. Robert
Let's do it.
Is age 70. So Robert says, my wife and I plan on retiring in 1 year. I'm presently using the 55 into 65 retirement allocation. My question is, when should I change to the income model portfolio? I'm thinking I probably won't need to take income from my investments right after retirement and could wait a year, possibly two, before needing additional income. We both receive a very good Social Security check and have a modest lifestyle. What do you think for Robert, who's 70?
That was great information that you give there. Of course, there's a lot of things that I don't know, but just based on the general information that you give there, I would suggest consider staying in the 65 to retirement portfolio. There is a little bit more of a focus on growth there. At age 70 and just entering into retirement, you probably still have somewhere between a 15 to 25 year life expectancy. So, that's a good bit of time that you have, statistically speaking. Nobody knows how much time we actually have, but statistically speaking, you have a good amount of time left. So you really still need to have some growth in your portfolio, especially in light of what we just talked about with inflation. We know inflation has been really rough. The official number for inflation over the last 4 years is, a 20% increase in prices. So, and we see that inflation appears to be, the disinflation trend appears to be slowing down. So I think there really needs to be a focus on continuing to try to stay ahead of the inflation that's coming. So as long as you have the risk tolerance to do so, I would consider staying in that 65 into retirement portfolio at least for the next 5 to 10 years, just depending on how your circumstances change. But that's going to help you grow your portfolio, get the growth that you need to keep up with inflation.
Awesome, Shana. Yeah, that's great. A quick one here from Daryl. He's 64, saying, I'm retiring in March of 2025. Will need income from my investments. Very low in healthcare right now, as well as industrial sectors. And there isn't much in terms of dividend-paying stocks on the buy list right now. So what do you suggest? Should I just wait longer to see if there might be some stocks that come up? What do you think for Daryl, 64?
So in healthcare, I mean, it's we're hard-pressed to find any stocks that pay good dividends. We're being a little bit cautious with healthcare right now with the uncertainty around what's happening in the government. You know, with RFK coming in, that can be a big potential disruptor to the healthcare industry. So, you know, I would wait it out if you can, or just buy from the buy list. And as far as industrial goes, I wouldn't really add any more to that sector just yet. We are working on some small modifications to the asset allocation model. So I would just hang tight in those two sectors. Thanks for your question, Daryl. We appreciate it. Well, folks, we've got to take a break right now, but we hope that you're going to stick around because we're going to be back with more financial issues right after this break.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
God is doing something new, and we can see it in the lives of kids across America. The gospel is going into schools, and we need your help. We are trusting God to raise $200,000 of new funding. This funding will allow us to have 5 additional focus regions, as well as a team member who will oversee all of our regions. Please join us for this Drive for 5 in 2025.
To help spread the love of Jesus to children across the country, go to crossroadskidsclub.com/5 in 2025.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
Sweet silver bells all seem to say throw cares away. Christmas is here bringing good.
Welcome back to Financial Issues. We hope that you're enjoying our Christmas music there. I know I am very much. It's a great time of year. It's a great time of year to remember that God came down, God with us, and He sent His Son to save us from our sins. Amen. So the most important information that we have on our Financial Issues website is, do you want to know God? And you can find that under the Resources tab. Maybe if you're catching this program for the first time, maybe if you don't know God, that's a great place to start, because then you're going to really understand where the crux of this ministry lies and where all of the advice and the things that we do comes from. It comes from a biblical perspective of knowing the Lord, of loving the Lord, and wanting to honor the Lord in all that we do. So, speaking of those things and stewardship and the Lord, let's get to our stewardship verse of the day. It comes from Deuteronomy 15:11. For the poor will never cease from the land, therefore I command you, saying, you shall open your hand wide to your brother, to your poor and your needy in your land. What What do you think, Seth?
This is good, Shana. It's a good reminder for us. It is a sad reality, unfortunately, but in a sinful world, there's always going to be poverty, and there's always going to be impoverished people. In fact, our Lord himself actually said that in his ministry as well. You'll always have the poor among you. And that's a truth. It's an unfortunate truth, but it is there. That means there's always going to be a grave need to open our hands wide to our brothers. And so I would hope that we would do that, especially as you just mentioned, Shana. You know, this season is one where we really need to ponder on just how amazingly generous God has been to us. I think that's, something that's really important for Christians today is, we can tend to at times get into a kind of a rut where we forget just how deserving of bad things we are and how many good things we've received. Of course, the greatest of those is our salvation. So if you're looking for an example of generosity, just look to God and look at how generous he's been.
That's good. Folks, we get to be the hands and feet of Jesus. Yeah. And, because we can't, God doesn't reach down and hand us money when we need it or, do things that we can really see. So we get the opportunity to be the hands and feet of Jesus. We get the opportunity to meet the practical needs of people. And a lot of times that just opens the door for us to be able to tell people why we do the things that we do. And it's because of the love of Jesus. Yeah. So well said. Just encourage you during this season to take an opportunity to really ponder on that and take action.
Absolutely. And of course, if people are looking for opportunities to be generous, ministries like us are accepting our year-end donations. And I know Preborn and Crossroads doing the same thing, Shana. So plenty of options to do. And of course, your church should come first. Well, Shana, we have a question here that I think a lot of people are asking as we're coming to the end of the year. This is a partner question from Margaret, and she's asking about CDs and what to do with the CD when it comes due. So she says, I have a CD, it's come due, and I'm wondering if I should reinvest following the asset allocation model or place that money back into another CD, understanding that rates are not as high. I'm heavy in cash and have fulfilled my allocation of preferreds, and I'm 64 years old. So Shana, what should listeners like Margaret consider when they have a CD that comes due, maybe some of the options they can consider? What should they do?
Yeah, so if you're following along with us, we give you an asset allocation model that you can use. So the first thing that you're going to do, Margaret, is you're going to adjust your portfolio tracker. So the money that's coming due from the CD, just move that to cash and reduce the amount that's in your CD. Then go to your output page, and it's going to show you exactly where you need to redeploy that money if you're following along with the strategy. So if that makes you underweighted in your fixed income, a CD might be a good option for you. But you can really look at anything that we have on the buy list for the fixed income sector to make that up.
Awesome. And then Shana, how might CDs fit into our investment strategy in particular?
Yeah. Well, I can tell you, and we're kind of giving everybody a little bit of a glimpse under the hood at the financial issue strategy. But for the past couple of years, we've used a CD ladder to construct a large portion of our fixed income portfolio because rates have been higher for CDs than they have been historically. So in a rising interest rate environment, bond prices decline. And in 2022, that's when the Fed really initiated their rate increasing part of their cycle, and we saw interest rates increase 11 times over 14 months. Well, when interest rates go up, bond prices go down, and in 2022, we saw fixed income values go down 15 to 25%. So the longer term bonds and bond funds got hit even harder, or on the harder end of that decline range. But it wasn't the case for short-term CDs. So with hindsight now, we can see that strategy worked really well because, CDs don't tend to lose value, that their value doesn't decline, and you get the interest that you're earning. So principal has been preserved in the CD ladders while earning a really good rate of return. So we've been anticipating for a while the rate cutting cycle would eventually start, and it is now starting to materialize, and we're expecting bond prices to sort of begin to stabilize. So as the yield curve disinverts, we'll be able to venture into maturities possibly beyond 2 years. So the yield curve disinverting, when a yield curve is disinverted, it just means that short-term rates are higher than long-term rates, and that's not the typical norm. You usually get paid a higher rate to lock your money up for a longer period of time. Like usually a 5-year CD pays more than a 2-year CD, but that wasn't the case. So we took advantage of that opportunity while it existed. We're starting to see that window of opportunity starting to close. So, we'll be issuing some more guidance on how to restructure the fixed income portion of your portfolio on the partner conference call, which, by the way, is today. So the historical averages for CDs, just so you know, for a 1-year CD, if you go back over a long period of time, the average historical rate for 1-year CDs has been somewhere in the 3 to 4% range. Rates were higher in the 80s, in the early 90s, often exceeding 8 to 10%, but from the financial crisis on, at least for the last decade or so, we've seen CD rates in a really, really low range up until just a couple of years ago, where we've been seeing, 5% plus CDs for those short-term rates. So we tried to capitalize on that opportunity. 3-year rates, the averages for those have been between 3.5% and 4.5%, similar to the 1-year CDs. Those rates peaked in the 80s as well, but sort of have come down from then. And 5-year CD rates have averaged 4 to 5% historically. So, you see that longer term rates historically have paid more than shorter term rates. So we have been sort of concentrated in the short end of the interest rate range or maturity range for a while, and we're starting to see those short-term rates come down. So if you can still find CDs that are paying over 4.5%, you may continue that laddering strategy for a little bit longer. But if not, we've added quite a few preferreds to the list. The preferreds that we have on the list are offering some really good opportunities for income, ranging from about 6 to about 8.3%. In yield for the ones that we have on our list right now. So I think it's kind of a good idea to shoot for a weighted average yielding about 5 to 6% for your fixed income portion of your portfolio, however big or little that is. So I do plan on discussing this more in detail on the partner conference call that is happening today. So if you plan on participating, you should have gotten an email. Check your email. If not, the information's up on the partner website. If you're not even a partner yet, it's not too late. You can go on the website, financialissues.org, become a partner. You'll have instant access into the partner side of the website, and you'll be able to locate the information to join in on the partner conference call.
That's great, Shana. Thank you so much for that. So we got another question here from a listener named Trip. Now, Trip, I don't think is a partner. However, he does get our alerts, and he gives during the preborn campaign each year. So we're thankful for listeners like Trip. Yeah. He's called in upon occasion. But his question is regarding UT31. Dan had actually given him this to buy, and he can't seem to find it on the broad list. I'm not sure how many years ago this was, but he doesn't like to make much changes to his portfolio, but is wondering, Shana, what you see as the future for UT31, and if he should sell it, what might be a recommended substitute?
Yeah, so UT31, it is still on the broad list, which indicates that it is a hold. It's fine. It pays a pretty good dividend, over 6%, I believe. Now, this particular utility company is involved in renewable kinds of energy, which probably will be less in favor under a Trump administration that wants to drill, baby, drill. But I think that, we're going to see an increase in the demand for all types of energy going forward, just because of, worldwide population increases. The more people, the more energy we use. Besides that, we have this whole AI revolution that is unfolding, and, AI is predicted to just about double the demand for electricity. So, we get electricity from a lot of different sources, including renewable sources. So, I think that it's fine to continue to hold this company.
Awesome, Shana. Thank you for that. James is up next here. James, 67. He's in the 55 to 65 allocation, and he owns CD 58. It's continued to go down, and he's thinking with the new administration coming, it might help it. He's wondering, should I continue to hold on to this, I know, long term, or should I take my loss and move to something that's not a small cap where I can recover from the loss? He has a follow-up question, too, about what's better to move out of an IRA into a brokerage account first, stocks and ETFs, or the Timothy funds. What would you suggest for those, Shana?
All right, so for CD58, I think the worst is probably behind it. Since this is a do-it-yourself strategy, we don't recommend that you're constantly turning over your portfolio. But, if you're looking at that stock and maybe you've lost patience with it, or you think that it might not be appropriate for your portfolio anymore, you're always welcome to review the buy list to see if there's other companies that you feel like might be a better replacement for you. As far as what to move out of an IRA into a brokerage, I would recommend probably the ETFs first, because they are a little bit more tax efficient than the Timothy Mutual Fund, or any mutual funds actually. And also, next I would go to stocks, and I would start to look at the stocks that are going to be some of your most aggressive stocks, because you get a little bit of a better tax treatment on the outside than you do on the inside. Well, folks, if you're listening to an outlet that only carries a short version of the show, we wish you a farewell today. For the rest of you, we hope you're going to hang around, because we've got more financial issues to come right after this. I'm your host, Shana Burt. Make sure you check out our ministry at financialissues.org.
If you don't get life right, you're not going to get all the other issues correct, period. It is the issue that impacts every other issue. Life is the central part of what keeps this republic together. It is the contract that the founding fathers passed down through multiple generations. Life, liberty, and the pursuit of happiness. You don't have life, you don't have a republic. There is a temptation out there right now. And I want to just tell you we must resist it. There's this temptation that we cast this issue aside. How does that honor God? It doesn't. And if it wasn't for preborn, I would be super just confused and depressed, because there has never been, in my opinion, a more disjointed time in the pro-life movement. We need a machine to go up against the Planned Parenthood beast. Like, we have to play offense against the pro-abortion forces in this country, okay? We have to play offense. And preborn does it in this compassionate, merciful, godly way that is just so inspiring and amazing.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurschools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues, folks. Taking you the rest of the way here. Great to be here with you this Christmas season. Boy, I'm loving that Christmas music also. It's fun. Hey, we do have a partner conference call today. You heard Shana mention that in the last segment. Please, folks, make sure check your emails for the call-in information, also for the access code. That is a partner-specific access code, of course, so we only give that to our partners. If you're not a partner with the ministry and you want to listen to that conference call, you've got a couple hours to become one today. You can do that right now, actually, by going to financialissues.org and clicking that Become a Partner button today. 1 p.m. Eastern Time, 12 Central Time today. Also, if you didn't get the email, but you are a partner, you can check on the website. If you go to financialissues.org, hover over the Partner tab, and then over on the left-hand side, you'll see Partner Conference Calls. Click on that. You'll be taken to the Partner Conference Call homepage, which has the same information that is in that email in that homepage there. So it's the time of the call, it's the phone number, the access call, the access code, and all that stuff that you'll need for it. So some great year-end wisdom Shana's going to give on this. I'm excited for it, and I hope you'll join us this afternoon for that conference call. Again, 1 p.m. Eastern Time, 12 Central Time. That's 1 p.m. Eastern, 12 Central Time. Hey, folks, I did want to tell you about our friends over at Timothy Plan. We love the Timothy Plan. They are fighting the fight alongside of us, being biblically responsible, fighting back in the culture war, of course, in the best way, which we believe one of the best ways to do that, of course, is with your dollars. So Timothy Plan offers biblically responsible mutual funds, ETFs, and retirement plans for investors who want to please God with our money. By the way, if you're a partner with us, or if you're a prospective partner, we actually offer a Timothy Plan model. So if you're looking for something that's a little more hands-off, if you need a little more help with your investment directions there, we offer a model that's based entirely off of Timothy Plan mutual funds and ETFs. So you don't have to worry about making some of the more specific, if you're looking to be maybe even a little more of a passive investor in that way, that'd be a great way to do that. I was supposed to have Art Alley on the show today. Unfortunately, Art's feeling a little bit sick today, so if you can pray for him, we'll have him on sometime soon. But if you want to learn more about Timothy Plan, visit them at timothyplan.com. So, folks, we got some inflation news out this morning that I'll give to you right now. The Producer Price Index, that increased 0.4% for November, was higher than the Dow Jones consensus estimate. That was right around 0.2%. Excluding food and energy, core PPI increased 0.2%. That met the forecast. Meanwhile, first-time claims for unemployment insurance totaled a seasonally adjusted 242,000 for the week ending December 7th. That's over and against the 220,000 forecast and up about 17,000 from the prior period. That's really the biggest economic news that we have left this week. Of course, next week is the big Fed week. We will get another Fed rate probably rate cut announcement, though it's, you can never tell for sure, but the markets seem to be pricing in that the Fed will cut rates once again in their December meeting. So that's next week. I think they make that announcement on Thursday of next week, December 18th. So be on the lookout for that. We'll make sure to talk about that on the show. Well, we've got some headlines to get to. Sam Case, my good friend. Hello, Sam.
Hello.
Thanks for joining me again.
It's always a pleasure, Seth.
It is. Absolutely. It's always fun. Sam and I have been doing this together in various ways for the last 4 years, so it's a joy to continue to do it now in this new way for all of you on financial issues. Some good news, Sam. We've been seeing some great pushback from people with common sense, people armed with truth, led by Christians most often in this fight for the truth, the fight for decency and for common sense and for biblically responsible investing, specifically in the public sphere and specifically when we're talking about finances. So we got some good news coming here. Target is involved in a lawsuit here, and it looks like it's continuing on. What do we got, Sam?
Yes, indeedy dandy, Seth. It looks like Target is certainly regretting its life decisions now, as earlier this month.
As one does when they make foolish decisions.
Right. Because a Florida judge earlier this month, they decided that a lawsuit against Target can move forward. This is a lawsuit over its 2023 Pride collection. We talked about that quite a bit on Financial Issues. In case you don't remember, this was a bunch of garbage related to the LGBT movement, a lot of it targeting children, most notoriously a transgender bathing suit so that kids could pretend that they're the other sex, and they were selling that in their stores, and now they're surprised that people were upset by it. Shock of shocks. Well, the lawsuit was filed by America First Legal. They're a conservative legal group in August of 2023. What it alleges is that Target lied to its shareholders about the potential risks of its Pride campaign. This is the really surprising thing, right? Like, I tell you that they're selling a transgender bathing suit for kids. We can all understand why people would be upset about that, but Target, for some reason, didn't think this would be a problem at all. AFL said in a statement, quote, Target assured its shareholders that it was monitoring for political and social issues and risks that could arise as a result of the ESG and DEI policies. However, management only cared when leftist, quote unquote, stakeholders cared about these business decisions. AFL also says that Target probably lost somewhere around $12 billion in market value since launching that Pride collection last year. They also say they hope that that lawsuit will serve as a, quote, warning to publicly traded corporations, boards, and management.
That's awesome, Sam. You know, whenever we see a lawsuit, I think it's good to just stop and look first, because actually, you know, the Bible does talk about this idea of bringing to court one another, although the context there is more brothers and sisters in Christ. But whenever I see a lawsuit, I'm always thinking, okay, what's this about? Is this really a good reason for bringing someone to court? Because it can be a mess. Sam, this is a great reason to bring someone to court. And this is not, listen, folks, we're not trying to just point the bullet right at Target and celebrate their misery. We want them to change. They have made a massive mistake. They made a massive mistake. Go back and listen to our shows from 2023 where we explored all the nonsense that Target was getting involved in during Pride Month, June of 2023. Sam mentioned the tuck-friendly bathing suits and different things like that. It was nonsense, man. It was just absolutely ridiculous. So when people, and when not just people, when corporations make massive purposeful mistakes like this wasn't just an, oh, oopsie, we messed up. This was a purposeful move. They need to be taught a lesson. They need to be taught a lesson. And I think Target is being taught that lesson in several ways, Sam. I mean, it's not just from this lawsuit, but they're losing customers. They're losing. It's great news, folks.
And we talked about a couple weeks ago that now they're probably going to really start to feel the pain because Walmart is backing away from this stuff.
That's right.
So now people are going to have an alternative option. Prior to this, Walmart was doing kind of the same thing, not to the same degree, but they were still certainly involved in this DEI stuff. But now that they're backing away, all these people who are upset with Target and didn't really have a viable alternative, they certainly have an option now. And I think this is only the beginning of the pain for Target.
Absolutely. Yeah, that's exactly right. So some encouragement for all of us, folks. It's working. Keep on doing what you're doing. Obviously, don't even think about investing your money in Target. I know for many of you, for myself included, we felt convicted that it's also a good idea of conscience to try not to shop in places like this, like Sam had just mentioned there. That's sort of the kind of that balance that we discuss on the show between patronage and stewardship, and those things often go hand in hand with one another. We believe stewardship is an obedience issue, whereas patronage is more of an issue of conscience. But I would encourage you, absolutely, if your conscience is pricked to not shop at Target, obey your conscience. Absolutely. And we're seeing that here. Target losing its market value, also losing customers. I think this is great stuff, folks. Be encouraged. The silent majority is becoming less and less silent. And I think this is really, really good stuff. The only way that corporations will know not to do this stuff again is to be taught a lesson. And this seems to be the lesson here for Target, definitely.
And it goes back to what Dan and Shana and you have been saying for years now about what corporations are supposed to be doing.
That's right.
It says so specifically in this lawsuit. The corporations their main focus should be on their shareholders. Their whole job is to create value for their shareholders, and here they're just not doing it. They think that their true purpose is to appear virtuous to these leftist lunatics, and they completely abandon what they're supposed to be doing, and they're getting sued out the wazoo for it because not only did they not do it, they lied about what they were doing, pretending that the whole reason they were selling this stuff was actually for a corporate profit, when obviously it wasn't going to work out that way.
That's exactly right. So great stuff to see here, folks. I really do mean that. And Sam, the last thing that I'll say about this is just celebrate other people's misery. I'm sure there are probably some Target employees that might see news like this and they might wonder, am I going to have a job? And I want to be charitable to those people. At the same time, this is a good thing. I mean, we need corporations. My hope is Target will see all of this and they will have a corporate repentance.
Yeah,
where they
I agree.
will say,
I used to love Target, so I would love nothing more than Target to return to being a good store to shop at. So that's what we want. We want
That's
Target
exactly
to get back to doing what they're good at, providing a good shopping experience for their customers and just ending all this other stuff.
Exactly. And you know what? It might be too far gone for them to be biblically responsible ever again. It might be. Maybe they could come back and be biblically responsible someday. But let's start with an apology. Let's start with hey, you know what? Back in 2023, yeah, we goofed up. We shouldn't have done that. That was really bad. We're going to try to do better by our shareholders and by our customers. And that would be a great step in the right direction. And hopefully, I think that would be a perfect kind of bookend to all of this, Sam. To my knowledge, we haven't seen it yet. So, but really good news, folks. Keep up the good work. Keep the pedal to the metal. The BRI movement is gaining steam, and it's really a wonderful thing to be a part of it. We got more financial issues coming up right after this break. We'll look at the markets here, as well as some other headlines going on in the financial space. Thank you all for joining us on the show this morning, by the way. However you're listening or watching, it's great to have you on the program this morning. Make sure to join the live chat as well. It's lively as usual. We'll be right back after this. What are some of the basics of the FISM partnership?
We look for good companies that people can invest in and expect a reasonable level of success over time. So for $132 a year, they get a step-by-step process.
Money talks, and so where you put your money says a lot about your heart.
It's for people whose hearts have been convicted to stand up and put a stop to the funding of evil.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner today.
Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or Financial Issues logo. Save a baby, save a life.
Kids all across the nation are facing challenges such as isolation and loneliness and bullying, but there's still hope and the love of Jesus, and we want to bring that to those kids.
Today, Crossroads has 6 focus regions across the country. We are committed to adding 5 more regional coordinators, reaching more kids than ever before. But we can't do it without you.
God is doing something new, and we can see it in the lives of kids across America. Children are finding hope and belonging and community and purpose in the love of Jesus. The gospel is going into schools, and we need your help. We are trusting God to raise $200,000 of new funding. This funding will allow us to have 5 additional focus regions, as well as a team member who will oversee all of our regions. Please join us for this Drive for 5 in 2025. Let's place 5 new team members in cities around the nation and watch what God will do.
To help spread the love of Jesus to children across the country, go to crossroadskidsclub.com/5 in 2025.
Securities offered through GA Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of GA Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Folks, we do have a conference call later today. Make sure you join us for the conference call, 12 p.m. Central Time, 1 p.m. Eastern Time. 12 p.m. Central, 1 p.m. Eastern Time. Check your email, or you can check on the website under the conference call page for the call-in number and the access code, the partner-specific access code, so that you can join that conference call today at 1 p.m. Eastern Time. Hope to see you there, or hope to hear you there as well. I guess as I think about it, I won't hear you because you'll be listening, but you may hear me from time to time, and you'll hear a lot of Shana. So make sure to join us for that. A couple things to be praying for, by the way, folks. Craig Halgard, I talked to him on the phone yesterday. He's doing well. So he should hopefully be back with an ag report next week. He's recovering this week, so you can pray for Craig. Also, tomorrow morning, we do have Bible study. I will not be leading Bible study tomorrow morning, though. Pastor John Webb is going to be stepping in for me. I'm very excited for him to be teaching a standalone Christmas message on the perfect time for Christmas. So we're taking a slight deviation from our Daniel series. We'll go back to Daniel next week, God willing. I will not be there tomorrow because I'll be with Josiah for his surgery. So I'd ask you all as well, if you think of it, to please pray for Josiah tomorrow morning. I don't know the time of the surgery yet. I'm hoping it's the morning, but we'll just have to see. It's one of those things we just have to wait and see. We'll find out later today. But boy, I do appreciate all the prayers that you've all given, for my son and for everyone in the FISM family. Seems like there've been a lot of surgeries lately. Darlene's husband had one recently, and now Craig as well, and then Josiah too. So the prayers mean a lot. We appreciate it. Also, folks, our dear friend Dan Steiner, who's the founder and president of Preborn, he has a new book out right now. If you're looking for a stocking stuffer, this is a great idea. Dan's book is called Hearing Jesus Say, Well Done. Pretty on brand for us here at the ministry, as our own founder, Dan Celia, always used to talk about that idea of hearing Jesus saying those words, well done, good and faithful servant, being a good steward with everything that God has given you. With our ministry here, it's about with our money. And I think Dan's book is a little more just about life in general. But boy, a great opportunity if you're looking for a good stocking stuffer for a loved one this Christmas. Dan's book is available on Amazon right now, so you can check it out there. Just type it into your search bar, Dan Steiner, Hearing Jesus Say, Well Done, and you'll be able to find it there. Well, let's get to the markets here, folks. On Wednesday, the NASDAQ shot out of the gate yesterday. It was rallying, broke the 20,000 point mark for the first time in its history. So big day for the NASDAQ, and that was a big swing back from a couple of rough days that the NASDAQ had previously earlier this week. By midday, major indices all in positive territory. The NASDAQ was leading the way. The S&P was doing well. The Dow Jones was hanging right around the flat line. It actually finished below the flat line. The tech giants, mainly Alphabet, Meta, and Amazon, they were all higher on Wednesday, along with Nvidia and Tesla. Tesla has been rocking and rolling since the not only Trump's win in the election, but also with his appointment of Elon Musk as well. I think investors have liked that a lot. Tesla shares have actually jumped to right around record highs, up above $400 or so a share. This rally comes after November's inflation report kept with expectations and kind of came in at that 2.7% year over year. By late afternoon, the Dow Jones had turned negative, and that's where it finished by Wednesday's closing bell, as I just said. Dow was down about 1/5 of a percentage point. The S&P 500 was up about 4/5. The NASDAQ, again, way up, broke a record, finished almost 2 full percentage points positive. Pre-markets this morning were kind of feeling a little iffy. As they sit right now, they're mixed. So the Dow Jones is just above the flat line. The S&P 500 is a little bit below the flat line at 0.25% negative, and the NASDAQ, following its big day yesterday, has now dipped under that 20,000 point mark and is down about 0.4% here. So that's what we're looking like on the heels of the inflation report that we saw earlier today. So that's what we're looking like here. The 47th president, soon to be 47th president, Donald Trump, did ring the bell at the New York Stock Exchange today. So some fun news there. I saw Claude mention that in the chat. Appreciate you bringing that up there, Claude. I almost called you Chat. I meant to say Claude. It's good stuff there. Speaking of the chat, good to see all of you. Lisa, Nelson, John, Claude, George is in the chat this morning. Great to see you, and James as well. So good to have you all there with us this morning on the chat, as well as our audience from Facebook. Hello to all of you, and YouTube and Rumble, and of course our radio audience, who I can't see, and you can't see me either, which might be a blessing, but could be a good thing for you. Good to see you all this morning. All right, Sam, let's get to some more headlines here. The automobile industry. Interesting reactions as they're looking forward to what they're hoping could be an optimistic time under Trump. What do we got from that?
Yeah, Seth, it looks like just about every industry is feeling pretty good about Donald Trump coming back to the White House. The auto industry is certainly one of them, as Cox Automotive now reports renewed optimism, in their own words, among car dealers heading into the new year. Dealer confidence jumped to 54 in Q4. That might not mean anything to you, but that's up from 42 the quarter before. So that goes from 54 all the way up from 42. So quite a big jump there. Yeah. And just for some some more context here, a year ago, the index stood at 41, and that's one of the lowest readings in history. So as you can see, Donald Trump is having quite a positive effect on the industry. That optimism is certainly being fueled by the incoming 47th president, though it should be noted that his reelection is putting a bit of a damper on the EV market in particular. Trump has vowed, of course, to end Biden's $7,500 EV tax credit, although I bet if you really wanted an EV, that's probably you're probably well off anyway, so that's probably not going to deter you too much if you're going to get a Tesla or something else.
For sure, yeah. Yeah, Sam, so I'm interested to hear your thought on EVs in general. We don't have a moral stance on EVs. I think it's more a common sense thing. I think you kind of can understand, okay, these cars are powered by electricity, which are powered by fossil fuels. So it's the same power that's powering it anyway.
It's just one step removed fossil fuels.
That's exactly right. That's exactly right. I have seen a lot of concerning things just in terms of common sense, like hearing about the batteries catching on fire and cars not being able to start in under 30-degree weather. What are your thoughts on that? Am I off base there?
No, I think you're right. I've always said about EVs is if I was a wealthy man, I think it'd be really fun to have something like a Tesla to get to and from work, and that's kind of
drive.
For Sunday drive, bombing around town, maybe going to the grocery store. But I'd never use it to go on vacation, long journeys. I go visit my folks back in New York. It's just too unreliable. I'd probably have another car to do that type of thing. But since I'm not a rich man, I'm not going to do that right now. So I definitely think of it more as a toy than anything else.
Yeah, for sure. Sam, you were exactly right when you said every industry seems thrilled with a coming Trump presidency. It does seem that way for sure. It says a lot about the quality of the incoming administration. Of course, Trump's not in yet. He's coming in January. Also says something about the outgoing administration, I think, as well. I think a lot of industries are kind of breathing a sigh of relief. Like, you know what? We couldn't take much more of this. Couldn't take much more. But boy, it certainly does seem like many are thrilled, including the automobile industry. So what else do we have there, Sam? We've got some interesting deregulation for big investors. This will be interesting for our audience to hear.
And this is part of the optimism, right? Yeah. Because Trump's doing this whole carrot and stick thing. So he's doing the stick with the tariffs. We've heard a lot about those. He's going to tariff all these companies if they aren't producing in America. But what we don't tend to talk about is what he's promising for the companies that do things in America. And it seems like a pretty sweet deal to me. Yeah. So Donald Trump this week on Truth Social, he said this: any person or company investing $1 billion or more in the United States of America will receive fully expedited approvals and permits. He said this includes but is not limited to all environmental approvals. And this, of course, comes as Donald Trump is really putting the pedal to the metal with deregulation. We've talked quite a bit about DOGE, but he's also planning to do something where for every one new regulation his administration implements, he wants to get rid of 10 of them. From his previous administration, he had a similar policy. It was, I believe it was for every one regulation, they got rid of 2, but now that's that same policy 5-fold. So he's really serious about this deregulation, and he's incentivizing it as well to get the most for the country out of it.
Yeah. It seems to me, Sam, just on the surface, this is an exciting thing. Even, just if you're talking about simply from a standpoint of a government that has become way too inflated, to borrow another term from investing, I mean, this has to happen. Trump has to start, slashing stuff. Our government has just gotten way too big. And so to hear that he went from 1 for every 2 to 1 for every 10, again, it says something about the outgoing administration. I mean, what they were involved in and how they tried to just expand. That can be dangerous things. But seeing a president who wants to shrink the influence of government, man, that's a good thing.
Mm-hmm. Oh, yeah. And that the expansion of the federal government under the Biden administration, that's an understatement, man. We were talking about that, about how Biden's regulations in the Federal Register broke records this year. I don't even remember what the number was, but it was higher than Obama or really any of the other presidents, and it's just insane. And his regulations have cost the country billions upon billions of dollars as well.
That's right. Yeah, you look back on history, Sam, one of our favorite characters, and again, every historical character, you got got to take the good with the bad. But I feel like, if you want to look at a good example, Calvin Coolidge was a great example of someone who understood the danger in the power that he held. As president of the most powerful government in the world, he could have expanded it a lot, and he chose not to. Yeah. And I think hopefully we can see some of that with this incoming administration here for sure. I think it'll have a trickle down effect, and will end up being a benefit for all of us as American citizens. That's my prayer, at least.
Yeah.
So
right with you, Seth.
Absolutely. Well, good stuff, folks. Sam, I appreciate all those headlines there. It's always good to chat with you on the air, and always good to talk with all of you folks on the show. I appreciate all of you so much. I do hope, again, conference call today, that you'll join us for that conference call one more time. That's 1 p.m. Eastern Time, 12 p.m. Central Time. Again, 1 p.m. Eastern Time, 12 p.m. Central Time. The phone number and access code are in the email that was sent to you as a partner. They're also on the partner side of the website. So make sure to check those and make sure to dial in at 1 p.m. Eastern Time. Join us then. For now, folks, remember, it's all His. Let's be found good and faithful stewards with what God has given to us. God bless you all. See you next time for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.